The Bank of England are expected to make their decision on interest rates any moment now. Will they cut those rates for the first time in almost a year? Well, joining us now is Mark Littlewood, the economist and director of Popular Conservatism. Mark, obviously the markets have one view. What do you reckon will happen in the next 30 seconds?
I'm a free marketeer. I'm not going to defy the markets. They say there's a good chance there'll be a quarter of
Mark,
a percent
I'm
cut.
going to interrupt you right now because we have the news. The Bank of England have cut rates by 0.25%.
Bang on
rates have
cue.
fallen down to 5%. Mark, I interrupted your prediction as your prediction became true.
There you go. Bang on the money. Bang on the money. I think I beat the news by a fleeting second. I think on balance this is good news, Tom. Inflation is back under control. The Bank of England are supposed to use interest rates to keep inflation around 2%, and it's pretty much bang on that level at the moment. I would say this, though, in the wider debate. We seem to have got ourselves into the ludicrous position of believing that the lower interest rates are, the better. Could we please cut them to 4%, 3%? Go back to them being negative in real terms. That's to say interest rates below inflation. That would be catastrophic for the economy. And I think the Bank of England's failure over recent years is they were too slow to put interest rates up. So we saw inflation peak at over 11%, and they've probably now been, over the last year or so, too slow to cut them again.
So how is this going to affect normal people in terms of, people who have got mortgages, people who are maybe thinking about moving house, those who are looking to buy, maybe for the first time?
If you are a borrower or want to become a borrower, you want very low interest rates. Already some of the banks are cutting their mortgage rates, I think in anticipation of this statement. Probably we're on a downward trajectory, one would guess, over the coming months. So if you're wanting to take out a colossal loan, whether that is to buy a house or anything else, it's good news if interest rates are falling. And that's usually what we focus on, those with mortgages in particular. But if you're a saver, low interest rates are very bad news indeed. And if you want the highest rate of return possible. And you don't get a great rate of return by putting your money in a savings account. Sure, you'll be able to buy more stuff at the end of the year than you could buy at the start of the year, but only by a whisker. And for the economy as a whole, good rule of thumb, interest rates should probably be 2-3% above inflation at any given time. That's about where we've got to. So one piece of good news in broken Britain, normality has returned, at least as far as inflation and interest rates are concerned.
But of course, many people will remember the early to mid-1990s when interest rates in 1992 reached the insane level of 13-14%, I think, at one point on Black Wednesday. This is obviously a lot lower. But perhaps the reason people feel it more perniciously is that they were so much lower for such a long time. People have made huge investments, borrowed huge amounts of money, expecting interest rates to stay at 0.51%. And so the rate of change is perhaps what has mattered more here than the absolute level.
I think you're absolutely right about that, Tom. In effect, since the global financial crash of 2008, we've all been going around getting drunk on cheap credit. Spending money rather than saving it. One of the reasons that investment is so low is with low interest rates, there is very, very little incentive to save money. Buy things now, because they're probably going to be more expensive if you wait a month or a year. So having got used to that, we now need to get back to something approaching normality. I don't think politicians have been particularly good at pointing that out to people, to listen to politicians of all stripes over the last 2 years. You would have thought it was a national priority to keep interest rates low. As I say, this return to normality, having got drunk, there may be a bit of a hangover for people, but this is the new normal.
Labour in this sort of living off the family silver, in that this is really the result of the work of the Conservative government. So how do you think interest rates will be affected by Labour policies going forward?
Well, it depends. An awful lot depends on the overall credibility of the government. If Labour spend money we don't have, that tends to fuel inflation. And the remit of the Bank of England, although I have to say it's often observed in the breach rather than rigorously followed, is they are supposed to have one tool, one golf club to achieve one aim, inflation of 2%. So if you are concerned, which I am to some degree, that Labour will go on a spending spree and this could fuel inflation already, we're hearing public sector workers, 5.5% pay rise. If you think there's going to be more and more of that, we might see inflation return, and that would mean interest rates going up again.
Although, Mark, obviously Rachel Reeves, the new Chancellor, used to work at the Bank of England, has the blood of the Bank of England going through her veins, for better or for worse.
Probably for worse.
Clearly, she has spent a lot of money in her first few days as Chancellor. She's been spending £10 billion on public sector pay rises. Given her history at the Bank of England, she'll be wanting to pay for that rather than borrow more money, is very likely. So we're going to see tax rises. We're going to see tax rises in October when there will be this new budget, this full statement from the Chancellor. What taxes will rise? And does this interest rate cut make tax rises now more likely?
I don't think it necessarily makes them more likely. They're pretty inevitable anyway. And we can be pretty certain whatever tax rises come, they'll be pretty inefficient ones, because for political reasons, Labour rolled out a whole menu of taxes that wouldn't go up, income tax and national insurance and the like, which then basically anything they didn't rule out is now on the table for how you might be able to raise more revenue. So it's unlikely to be done from sound, sane economic thinking, more a reflection of the promises they felt they had to make for electoral reasons, and then hell's teeth, where do we actually grab some money from? But here's the problem I think Rachel Reeves is going to run into. We are now basically, in roundabout terms, taxing the British economy to the maximum. No government of any stripe in my lifetime has managed to squeeze more than about 38% of national income out in tax. And we've tried virtually every array of tax policies you could possibly imagine
We've
over
had
the last...
top rates beyond 90%.
and as low as 40, we've had VAT between 5 and 20%, you name it, we've tried it. And it does seem, just as an empirical fact, 38% is about the most any government of any stripe can squeeze out of the economy if it's determined to get every last penny it can from the private sector. And we're about at that number. So I actually think we're going to have to see spending cuts at some point really do the heavy lifting here, because you can't just keep putting up tax rates and assume that revenue will follow if you are already taxing the economy to the maximum.
But how willing are Labour to make those spending cuts if they're going to have a sort of gold rush for public sector salaries once they've sort of given some leeway to the junior doctors and will be hounded by others asking for more and more and more pay rises and more industrial action?
Yep.
How are they going to make those cuts? And even if they did make cuts, through certain efficiencies, maybe even in the civil service, that's not going to be able to raise all of the funds that they need.
No, it's not. It's a very good question. My default fear is that Labour will spend beyond the means of taxpayers to an even greater degree than the Conservatives did over 14 years.
And the inflation
However, from a purely economic standpoint, you can argue about the politics of it or the fairness of it. We have seen announcements on winter fuel allowances being cut back. We might see other welfare cuts. So perhaps Rachel Reeves is giving with one hand to public sector unions, Labour's staunch allies, and taking with the other from affluent pensioners who tend to vote Conservative.
In some ways, what we saw between 2010 and 2024 was austerity for anyone under the age of 65 and a pretty generous sort of social democracy for anyone over the age of 65. Are we about to see that equation flip? And instead, we're going to see more taxes and fewer benefits for the old, but much more spending for those in work?
Well, I'm not quite sure what that much more spending for those in work might be. If you are a public sector worker, you might get an above-inflation pay rise. But if you're working in the private sector, and let's say in your 20s or early 30s, I wouldn't be counting your chickens just yet.
Unless you're one of those workers who's on universal credit.
Yeah, that's possible. It's possible. But I think the truth of the matter is there is very, very limited room in the spending envelope here. I think the best thing that the government could do is to try and get down taxes on the key things that would encourage growth. We hear from politicians of all parties about we've got to get growth. This is apparently what the Labour Party are going to bring about, but not too many concrete plans for actually getting there. It seems to be a wish and a prayer rather than a strategy. There's going to be a few things about skills investment and the rest of it. But the truth is you get growth if you deregulate and cut tax in the wider economy.
Are they also going to chase those higher earners out of the country by potentially raising certain taxes and, the impact that they might have on, say, because of net zero policies and whatnot? They therefore will lose the taxes that they could have got from those people. Meanwhile, they're talking about putting over 800 million into HMRC itself in order to try and make it more efficient at, as you were saying, squeezing every last penny from the British people.
Yeah, I mean, look, always the easiest thing, if you're a politician trying to balance the books, is that you sort of wish your way to believing there can be colossal efficiency gains. If we save a bit more on paper clips over there, or have a better filing system over here, or, God help us, a new IT system to make things work better, that's what they reach for. Truth of the matter is, over the medium term, our public finances are not sustainable. We're now more than £2.5 trillion in debt as a cash balance. We have huge liabilities that we've not saved for. Public sector pensions we've not put a penny aside for. If any pensions company had operated like the government has done over the last 30 years, its directors would be in prison. So we have these huge things coming down the road. But politicians, tend only to think, not really even in a 5-year time horizon, but in sort of how do I get through the next budget or the next few months. So the inevitable consequence, I'm making a mathematical point here, not an ideological one, is that government spending is going to have to fall at some point.
And yet, Mark, to zoom back to where we are today, and perhaps to try and paint a sunnier picture than the long-term fiscal cliff that perhaps we're talking about, why on earth did Rishi Sunak call the general election at a time when we hadn't had a single interest rate cut, at a time when we hadn't had the news about the UK economy growing actually faster than comparable European G7 countries, and at a time when frankly we'd only seen inflation down for 1 month. Now we've seen inflation down for multiple months. Growth is due to be the highest in the G7 this year, and now we've had an interest rate cut. I mean, surely if there was a time to call the general election, it would have been now. Instead, he's gifted this to the opposition, now the government.
It's extraordinary, isn't it? I mean, I don't know what the then Prime Minister was predicting about the economy, but I think waiting would have been a better option. My theory is, but I don't know for sure, is that his rationale was not based on the economy. It was based on his fear that Rwanda flights would not get off the ground over the summer, that the small boats crisis would get worse, and if he called a snap election, he'd be able to catch all his political opponents off guard. Unfortunately, by calling the election, he didn't catch any of his political opponents off guard. He caught his own party off guard. The Conservatives were caught off guard. So I think it will go down as a rash and incorrect tactical decision. Frankly, I don't think the Conservatives would have won in November anyway, but if there was good economic news coming, you might speculate that they would have won more than 121 seats when it came to it.
Perhaps only a 1997-style loss as opposed to the worst loss in the history of the Conservative Party. Mark Littlewood, thank you so much for talking through the wider economic context there.